Here's your cycle high. How many weeks are we at? We're at 42. What does that tell us? We could go out to, let's say, 53. That would take us out to October of this year, which is interesting because it's right before the midterm elections. Now, to do the calculation, and this is kind of scary, and this is where it gets tricky. Does it play out to target? If it does, you draw it from the highest point to the neckline, right? So highest point to neckline. This is the neckline, the dotted line. And from wherever you break, that is your downside. And if this is correct, there is another big flush coming at some point on Bitcoin, possibly to 35,000. And that could be, I mean, if we think about it, if that's correct, that takes us out to October.
Despite Bitcoin's resilience over the past several months, through institutional selling, geopolitical shocks, and security scares, Soloway believes the bigger cycle may still have unfinished business. In his view, Bitcoin could enjoy one more meaningful rally in the weeks ahead before entering another painful leg lower. More importantly, he isn't simply throwing out an arbitrary price target. He's using a recurring pattern from previous Bitcoin bear markets to estimate not only where the next major low could form, but also when it might arrive. If he's right, Bitcoin could still have several weeks before this cycle finally reaches maximum pain. But if he's wrong, it may be another sign that this cycle has permanently diverged from every one that came before thanks to unprecedented institutional participation, ETF, demand, and a market structure unlike anything Bitcoin has ever experienced. Either way, the charts he's about to show deserve a very close look. In today's video, Gareth Soloway breaks down why Bitcoin still looks constructive in the short term, explains the critical price levels that could trigger either a breakout or another collapse, and reveals the historical cycle measurement that points toward a possible $35,000 bottom later this year. As always, remember these are probabilities, not certainties. If you enjoy balanced Bitcoin analysis that looks at both the bullish and bearish cases, make sure to like this video, subscribe to the channel, turn on post notifications, and let us know in the comments where you believe Bitcoin bottoms during this cycle. Thanks for joining us and enjoy the video.
Bitcoin has stalled. The chart on Bitcoin is still somewhat short-term bullish. Okay, well, what do we mean about that? Well, you still have this general pattern here. We have this move down, then this bigger move down, and then we're still kind of making this awkward shoulder over here. Or what I like to look at when I see this is, to me, it looks a little bit more like a cup and handle pattern. So for me, this is still net bullish in the near term. And please understand, when I say near term, I mean like over the next 2 to 3 weeks. All right. Not over the next multiple months. My near term is very near term. Midterm is usually multiple months. Long term would be like 6 to 12 months for me. That's the extent of what I am as a swing trader. Now, we still have that structure, but I am monitoring this trend line right here. So if we take this trend line, what we can do is we can connect it almost perfectly to every pivot low along here. And what that does is it gives me a base point to know if this structure fails, right? So the biggest thing for investors and traders is to, number one, understand that you could have a great setup. It doesn't mean it's going to work out. Setups fail. We live in a world of probabilities. And so the probabilities favor it, but probabilities by default, it's not, you're never going to get 100%. And so you have to know where that is going to fail. Like, where do the probabilities start to shift? And that's what this trend line does right here. It gives us a very firm level, basically 63,000, that if we were to start trading down here, I would be very concerned we're going to go reattack the recent lows on Bitcoin and potentially go even lower. Now, on the other side, the question would be okay, well, what's the trigger for a bigger breakout? Like, where do we need to take out to get that push to Gareth's 71 to 72,000 price target in the near term? And that's really easy to see here, folks. You can see you have this pivot high right over here, which is exactly where we went up to right here. All right. So essentially what we're creating is a decent or an ascending trend line with a horizontal trend line, and price as of now is staying in between this zone. And what we're looking for is, does it break out? If it breaks out, we got a $71,000, $72,000 price target. That's a near-term price target. That doesn't mean it can't break that. That's just where you would expect resistance. And then to the downside, if it breaks basically 63,000, you likely head back to your lows at 57,800, possibly even lower. All right. So that's just a simple rundown of where we are. The bias, again, AKA probabilities, is still bullish on Bitcoin. But again, we're trading in this tightening range, an ascending trend line underneath, which right now, if 57,000 broke, that would cancel out the bullishness. The probabilities would switch to 50-50 or even possibly negative. And then on the other side, the slight negative, slight positive bias, we're at about a 60% bullish bias. If we break above 67,000, that is where we get the bigger push, where probabilities would quickly jump to like 75-80%, that we're going to zoom up to 71 to 72,000. All right. So again, real traders look at things in terms of probabilities. All right. Sometimes charts are kind of in this slight positive or slight negative zone, and you just have to accept that. That's part of the deal. The traders or investors that are like all in on one side or the other, they're the ones that go this way to zero in their portfolio. Smart investing understands levels, and they understand key breakpoints that invalidate things or change probabilities, or things that validate or raise the probabilities of success.
This is one of the biggest differences between professional traders and emotional investors. Rather than predicting the future with absolute certainty, Gareth assigns probabilities to different outcomes and constantly adjusts those probabilities as price moves through key technical levels. Right now, Bitcoin still holds a slight bullish edge in the very short term, but only as long as its underlying structure remains intact. Lose those support levels, and the odds quickly begin shifting in favor of another major decline. But zooming into a few weeks of price action only tells part of the story. To understand why Gareth remains cautious over the coming months, we need to zoom much further out. That's where Bitcoin's previous market cycles begin revealing a remarkable pattern. One that has less to do with price and far more to do with time itself.
Now, what we're going to do is look back at the chart of Bitcoin, and we're going to go to a bigger time frame. And what we're going to do here is we're going to zoom all the way out. So what we have here is 2017 bull market high, 2021 bull market high, 2025 bull market high. Now, remember, in October of 2025, I was able to call the top on Bitcoin by using this trend line. Simple trend line. I didn't reinvent the wheel. I didn't do calculus. Man, I can't even remember how to do that. I was not even that great back when I learned it, back way long ago now, 30 years ago. I don't know. Anyways, the point is that trend lines are easy ways to tell where resistance and support is if you know how to draw them, which is a lot of times just connecting major pivot highs or pivot lows. All right. But here we have it. Now, one of the things I was looking at is I was looking at the different structure. Each bull market high has had a different structure to it. So for instance, this structure is fascinating. This is very a la gold in 2026, right? So what do we mean by that? Well, you have this sharp move up, then you have the big correction, then it chops here and eventually breaks down. It's very actually silverish. This is almost identical to silver. In fact, if we just quickly look at this, and I didn't mean for this to be a silver video, if we look at this, look, you have the big move up, big collapse, then it hammers, and then it breaks down, right? So very similar in that way. Now, if we look at the other cycles here, we can see this was a different cycle. This was a double top cycle. You had a big push, correction, big push, and then the bear market. And then this cycle has actually been a different one too, which is fascinating. This is what we would call a head and shoulder cycle high. Shoulder, head, and shoulder. Okay, so I just think that's fascinating. Regardless of, number one, it shows you that there's different cycles involved. Cycles can have different types of highs, but in general, it's driven by different types of sentiment. And honestly, a lot of it has to do with how much institutional action is in the trade at that time as well. But one of the things I was looking at is I was saying to myself, okay, well, how many candles from the high until we essentially bottomed out for the cycle? And this was 53 bars, right? Until we hear. Now, it's not like we ripped up, right? I mean, you kind of went sideways for even longer, but the bottom was about 53 weeks long. So essentially a year long, right? 52 weeks is a year. Now, from this high, how long until we bottomed out? Well, lo and behold, 53 bars. Now, isn't that fascinating? Okay, so that is really intriguing. So while each bull market cycle in Bitcoin was slightly different in formation, all topping signals though. I mean, you had the M top, double top in 2021, the head and shoulders here in 2025. We had this blow off top, a la silverish type thing in 2017. But notice how each bear market is essentially the same distance. Now, what does that tell us about where we currently are? Are we at a cycle low? And the answer is to the low, 38 bars. Even if we go to here, we're only at 42, which tells me there's at least 10 to 12 more weeks of risk of further downside. In addition, one of the things that is concerning, and I'll end on this, guys, is that even though I'm near-term bullish, and remember, a good trader can trade multiple time frames. And so I've been long and short. I was majorly short at the highs on Bitcoin at the bull market high. And then I've gone long multiple times on this down move and made money. Okay. In fact, each time I've made money. It doesn't mean that I think the downside's over. The downside is honestly, I don't think it's over. And I'll lastly simply just put it to you this way. Here's your cycle high. How many weeks are we at? We're at 42. What does that tell us? We could go out to, let's say, 53. That would take us out to October of this year, which is interesting because it's right before the midterm elections. And the question is you have a head and shoulder pattern that is still valid, right? Here's your head and shoulder tool. We have shoulder, head, right? Shoulder, and then you had your breakdown, right? Now, to do the calculation, and this is kind of scary, and this is where it gets tricky. Does it play out to target? If it does, you draw it from the highest point to the neckline, right? So highest point to neckline. This is the neckline, the dotted line. And from wherever you break, that is your downside. And if this is correct, there is another big flush coming at some point on Bitcoin, possibly to 35,000. And that could be, I mean, if we think about it, if that's correct, that takes us out to October, right? Remember what we just looked at. We looked at if it matches the distance, then it would be by October, we hit about that 35. And I got to put it up to so where it's at 35,000 here. There we go. We hit 35-ish thousand by October. Again, is it going to work out? No one really knows. But this is the best tool in my tool belt for trying to figure out where do I really load the boat. Now, listen, will I wait till 35,000 to buy any Bitcoin? No, because sometimes targets don't hit, and that's okay. Things can change. Charts can change. But for me, I'm probably waiting below 50,000 before I start nibbling on Bitcoin.
What makes Gareth Soloway's outlook so compelling is that it isn't a single prediction, it's really 3 different forecasts depending on the time frame you're looking at. In the near term, we think his bullish case deserves serious consideration. A decisive break above resistance could easily trigger another move toward the $67,000 level and potentially extend into the $71,000 to $72,000 region. Several macro catalysts could support that move. Markets continue to speculate about the possibility of a Federal Reserve pivot if economic data weakens further. At the same time, growing questions surrounding lofty AI valuations, especially after the rapid progress of lower-cost open-source models coming out of China, could force investors to reassess where future capital flows. If expectations around the AI trade cool, some of that liquidity could once again rotate toward Bitcoin and other digital assets. The bigger debate surrounds Gareth's midterm projection. His call for a possible move toward $35,000 isn't based on fear alone. It's built around the observation that Bitcoin's previous bear markets each required roughly the same number of weeks before reaching their ultimate bottom. Applying that same timing model to today's cycle points toward another flush lower before a durable recovery begins. It's a disciplined framework, and one that has served him well in previous cycles. At the same time, this cycle has repeatedly reminded us that history doesn't always repeat perfectly. The very fact that Bitcoin's 2025 peak unfolded differently than many expected is evidence that institutional participation has fundamentally changed the market. Spot Bitcoin ETFs, sovereign interest, corporate treasury adoption, and a much larger long-term holder base have all introduced forces that simply didn't exist during previous cycles. That doesn't mean Bitcoin can't experience another sharp correction, but it does suggest that older cycle models may no longer play out with the same precision they once did. Unless a true black swan event emerges, an exact repeat of previous bear market behavior becomes increasingly difficult to assume. And Bitcoin's resilience over the past several months only strengthens that argument. The market has absorbed significant headwinds, including criticism surrounding Strategy's partial Bitcoin sales, the uncertainty created by the on-again, off-again conflict involving Iran, and more recently concerns raised by the ongoing cold card wallet security incident. Yet despite all of that, Bitcoin has continued finding buyers whenever panic begins to spread. Whether Gareth's $35,000 target ultimately proves accurate or not, his broader message remains invaluable. Successful investing isn't about predicting the future with certainty. It's about preparing for multiple outcomes and managing risk accordingly. That mindset will likely matter far more than any single price target as this cycle continues to unfold. If you enjoyed this breakdown, don't forget to leave a like, subscribe to the channel, and turn on post notifications so you never miss our latest Bitcoin and macro market analysis. And if you found this analysis valuable, consider sharing it with someone else following the markets. Thanks for watching, and we'll see you in the next video.